Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. From the recent 1-hour structure of Bitcoin, overall price volatility has been relatively small. It is mainly moving sideways within a range, with highs and lows pulling back and forth. However, the trading volume is continuing to shrink. What we are seeing is a state of low volume consolidation. In essence, this looks more like capital waiting for a directional choice. Bulls have not added sustained volume to push for a breakout, and bears have not increased volume to complete an effective breakdown. The market has entered a typical late-stage exhaustion phase of the range. Now let's look at the daily chart. The current price is still testing the lower boundary of this large consolidation box. The upper boundary of the range is around 95,000, while the lower boundary is around 86,000. The current behavior shows a temporary stabilization at the lower boundary, but it has not formed a strong reversal. In other words, holding the lower boundary does not equal a bottom. It is more like a short-term technical pause. Let's further examine the 4-hour chart. We can see that the rebound from the recent low has not even managed to hold above the 0.236 level. It has failed to stand above it, which indicates that the strength of the rebound is clearly weak. At present, the bulls can only defend key areas to prevent further decline, but they are not capable of changing the trend for now. Under this premise, the more logical development would be that after the rebound faces resistance and volume fails to follow, price will once again pull back to retest support. From a short-term structural perspective, this can be understood as a risk of a second pullback after the rebound, especially when each rebound fails to lift price above key dominant levels and volume continues to decline. The lower boundary of the range will be continuously consumed. Once heavy selling volume appears, the breakdown will be more decisive. Now let's look at it again from the daily moving average perspective. The overall daily moving average system has already turned downward. Trend pressure has not been relieved, which means that rebounds are more likely to be corrective moves within a downtrend, rather than a true trend reversal. Going forward, there are two key aspects to focus on. The first is whether the rebound can reclaim key resistance levels, such as standing firmly above the 0.236 level and gradually pushing toward the midline of the range. If this does not happen, all rebounds should be viewed as weak repairs. The second is to monitor the key support below. On the daily chart, the critical support is the 0.786 level at 85,600. Once this level is broken, it usually means the structural defense line has failed and the market will enter a downward phase, seeking the next support zone. At that time, it is often accompanied by expanding volatility and accelerated downside movement. Overall, the advantage currently leans toward the bears. The market is in a pre-breakdown consolidation state, rather than a bottoming structure. Overhead resistance is heavy, rebounds are weak, and volume is shrinking. The optimal strategy is not to chase breakouts or panic sell, but to trade based on confirmation around key levels. If price rebounds to resistance without volume expansion or breakout, be alert for a second pullback. In other words, at the 0.236 level, watch for the risk of a second decline. If the lower boundary is lost, with expanding volume, then follow the trend to look for support below, including the lower boundary of the range and the 0.786 support level. Only if price firmly reclaims the daily 0.236 level and recovers the key moving averages and the midline of the range can we talk about trend repair. For futures trading, pay close attention to position sizing and stop-loss. The end of a range often produces false breakouts and sharp whipsaws. That's all for today. See you tomorrow.